Hey guys, today we are going to analyze the company called TCS. So first let's have an introduction on what is TCS. TCS is Tata Consultancy Services. It is an IT service consulting and business solution organization. It partners up with various companies and has been providing business solutions and help to them for the past 50 years. It is one of the most reputed companies in India. It is also enlisted in the share market. In TCS, they help businesses transform through technology. The kind of businesses that TCS deals with includes banking, education, healthcare, etc. TCS was first enlisted in the stock market on July 29, 2004. It is one of the subsidiary branches of Tata Sons, which is one of the largest company in the entire India. The issue price of TCS when it was first enlisted was 775 to 900, somewhere in between. So let's move forward and discuss about the bonus shares and how many times Tata Consultancy Services has issued bonus shares. So TCS has provided bonus shares to its shareholders on three different occasions. The third and the most recent bonus issue was announced on April 19, 2018 with a ratio of 1:1. That means if you hold 100 shares on April 18, 2018 of TCS, then you would have gotten 100 more shares as a bonus. This was one of TCS ways to attract more shareholders into its company and provides various benefits for buying and holding its shares. The main topic that we are going to talk about is dividend payment and of regarding this company that we are discussing about, that is TCS. So first of all, let's talk about what is dividend payment. A dividend is the distribution of a company's earnings to its shareholders and is determined by company's board of directors. So the board of directors decide how much dividend should be distributed to its shareholders, and this is a method to reward the company's shareholders. Further on, let's move on and talk about the various dividend payouts given by TCS over its long history. TCS has been returning cash to its shareholders consistently from the time of listing, if you remember, which we talked about, that is in 2004, through various methods like interim dividends, which is distributed like for every quarter, and then there are final dividends which are distributed at the end of the year when the annual reports of various companies are published, and occasionally they also provide special dividends. Now the next slide showcases TCS's history in regards to this, and the source of this data is the website of TCS itself, so you can go and check it out that all of this data is actually valid. As you can see on the screen, these are the various times that TCS provided dividends to its various shareholders. The last time TCS provide the interim dividend, that is dividends which are provided within the year, was on 20th July 2023, and it was handed out as cash to all its shareholders on 7th of August 2023. The final dividend, which is paid at the end of the year, was paid out on 3 July 2023. And a special dividend in which a huge sum of money was provided, that is 67 rupees per share, was provided on 3rd of February 2023, while it was recorded on 17 Jan 2023. Now let's look at what is the effect of TCS when share prices when TCS decides to hand out dividends. Last time TCS recorded its final dividend, it was on 15th January 2023. The closing price for the share was 3216.30 rupees, and the very next day it fell to actually 3174.90 rupees. So we can see that the dividend payout had an actual negative effect, but it was not too severe. We can also see that on 20th July, when TCS handed out its dividend to its shareholders, the share price was 3,463.30, and the share price fell to 3,368.30 on the immediate next day. Hence, again a negative effect. Similarly, when TCS handed out its special dividend, there was no negative effect. There was not much, at least. The share price actually increased. But what was interesting is that over the next few days, there was a little slowness in the movement, in the upward movement of TCS's share. So, from all this, we can conclude that dividend payout is perceived a little negatively by the market. However, the recovery of share prices comes along easily, as it is not considered too negative in the long run. Thank you. That's all from my side. My name is Sankit Anand.
So, hello everyone, this is Saral Saini, and we are covering TCS, Tata Consultancy Services, and my topic is share buyback. Now, the share buyback, also known as share repurchase. So, by the word, you can understand the share buyback, something we have put in the market and we are buying it back. But why companies do it? So the major reason why companies do it is to reduce the number of shares available on the market and to increase the value of the available shares. For example, take an analogy. See, you you took to a party some 10 slices of bread, and there are only 10 people there. So everyone will get one slice of bread, and there will be no havoc for anyone. But now imagine you eat two of them. Now there are only 8 slices for 10 people. Now, automatically, the value for other 10 slices will increase. And this is also a major reason why companies do a share buyback to increase the value of their remaining shares in the market. Now, if we see, these are the major reasons why companies do the share buybacks. Uh, Companies buy back shares for a number of reasons, such as to increase the value of remaining shares available by reducing the supply or to prevent other shareholders from taking a controlling stake. Also, when you buy back some shares, you show to the market that you have the capability to buy your own shares, means you have surplus cash. And this results into more trust in the company, in the market. And in the history, if you see the history of buybacks, this is the major trend from the big companies who are increasing their sales every year. They are doing the share buybacks to show the market that they have the power and they have the manipulative power, and they increase the prices of their shares every year. Now, if we see TCS, this is the trend for TCS. They do the share buybacks regularly, and if we see a latest share buyback, they have done in February 23, 2022. This was for identifying the eligible shareholders whose shares would be bought back by the company. And you would be surprised to know that from 2017 till now, TCS has done share buyback 3 times, and that's not a small number. That's a big number. So if the companies like TCS, who are big IT players, can do 3 times, you can think of the other companies like Google, Meta, Facebook, how many times they are doing the share buybacks to increase the value of their shares, and you can check their value shares on the any of the apps. Now, see, TCS approved buybacks for its stock 3 times since 2017. The buybacks are parts of TCS long-term principle, allotment policy of returning excess cash back to its shareholders and reducing the number of shares traded in the open market. Buybacks generally indicate that the company has set aside an emergency corpus and has surplus cash. I already told you. They show that they have surplus cash, and this increase the trust in the market, wherein the business's possibility of an economic downturn is less. And they show the market that possibility of going them into the losses is very rare. It's like if the world is going to end, then they are going to end, nothing else. If we see other big share buybacks, and I have told you already that many big companies do it regularly. This is the part of their principle, or you can say this is the part of their business model. Now you can see big company names on the slide. S&P 500 companies such as Apple Inc., Alphabet Inc., Meta Platforms, Microsoft Corporation, ExxonMobil Corporation, Procter and Gamble Corporation, and Lewis Corporations include. And in India also several companies has announced buybacks to improve shareholder value, such as Bajaj Auto, and every other big company is doing that because they have the power and they have the manipulation power so that they can increase the value of their own shares. You can see that S&P 500 companies did it in 2022, and they will do it regularly in future also. Now I want to show you the prices of these companies. So let us go for the TCS share prices. Let's go on the net, and you can see the price of TCS share. It's a big amount, it's a huge amount. You should have 3,382 rupees in your pocket to buy a share of TCS. I want to show you a different trend also. Let's go for a 5-year trend. Now you can see that TCS managed to improve their share prices regularly. Their graph is always going up. If we ignore minor deductions in the COVID period, we can see they are regularly increasing. And one of the major reasons for it is share buyback. And if we go for maximum, they have started from 2005, and in 2005 their share prices were 162, and now you can see their growth. They are on 3,380.45 rupees. You can see. So this is the, I won't say that this is only because of share buyback, but large part of it comes from share buybacks. So now this is from my side. Thank you everyone. My name is Saral Saini.
Hello everyone, I am Himanshu Sharma. Today we will be covering everything about stock split. What is stock split and how does it affect the stock price of the company, and does it affect your investment, and why do companies announce such corporate actions? I'll tell you everything about stock split. Let's see the video. A stock split is a corporate action where the face value of the share is divided further while the number of shares gets multiplied by the same factor. Let's take an example here. Let's assume I have a company worth of $1 million and the ownership of the company is divided into 10,000 shares with having a face value of one share $100. And let's assume my companies launched various new products and our customers like very well, and we grew a lot, and the company's worth of $10 million, and the face value of one share becomes $1,000. It is, I think it is very large for a normal investor to invest now. So what we will do in case to maintain the liquidity of the stocks, we will use stock split. Let's assume we use a stock split for 5 for 1 split. In this case, the one share is divided into 5 parts of face value 200, and increase the share by 10,000 to 50,000. It will help increasing the liquidity of the company. Let's see TCS stock split history. TCS has undergone of total 3 stock splits, one in 2006, again in 2009, and 2018. To be honest, 2018 stock split was the real successful. Imagine here, in this case of TCS, if you have had buy a stock of TCS before 2006 and Now it will become eight, eight stocks. After the 2000, then 8 stock split, TCS price share would increase by 200%. The impact was massive and TCS almost grew 200%. Seeing the market capitalization, before it was $84 billion and after the stock split, it will become $166 billion. It is due to the number of share increased and increasing the volatility of the stock. Conclusion is that stock split is a strategy that unlocks value for the company and investor. TCS stock split in 2018 was a success as it increased the liquidity of the stocks, made it more affordable to the retail investors, and attracts institutional investor also. That's all from my side.
Good afternoon, everyone. My name is Bhartendra Singh, and I got a topic on TCS IPO. So let me first give an proper introduction upon what is an IPO. An IPO is a initial public offering or a stock launch in a public offering in which share of a company are sold to initial investor and usually also to retail investors. And IPOs are typically underwritten by one or more investment banker who also arrange for the share to be listed on one or more stock exchange. An initial public offering refer to process of offering share of a private corporation to a public in new stock insurance for the first time. An IPO allow a company to raise equity capital from public investors. So this is a brief introduction upon what is an IPO. So let's talk about TCS IPO. So TCS has first TCS just introduced its IPO in the year 2004, and TCS, Indian largest IT outsourcer, announced a one-time bonus to all eligible employees earlier this week. The bonus marked the 10th anniversary of TCS initial public offering. So TCS has not helped his employees to become richer, but it also become a wealth creator of millions of shareholders. In 2014 till 15, TCS gave total cash payout of around 17,000 crores, or as you can say, $2.9 billion. So, so from August 25, 2004 till now, TCS has issued bonus twice in ratio of 1/1. So, and the bonus share were issued first on July 28, 2006, and later on June 16, 2009. So, investor who bought just a share of IPO invested 850 rupees would have 4 shares of TCS by now. So this was and TCS total IPO worth is around 4,730 crores. So this is all about TCS IPO, and thank you sir for giving me this opportunity to present this topic. Thank you sir and my friends also.